Are you a podcaster? Maybe you've got that big idea and you're looking for a network to join. The multi-award-winning Ozcast Network can get your content to eyes and ears all over the world. Join now for the first month free, and you could be featuring this sound at the beginning of your podcast. Ozcast. Simply head to ozcastnetwork.com for details.
I had a very interesting evening last night. The Commonwealth Bank had a function at this beautiful Penfolds winery up there at McGill, the cellars at McGill. Absolutely fascinating to sit there and listen. There was a discussion about the economy and things that will relate to us, every one of us, in this coming year. The gentleman who was speaking was Stephen Halmarick. He's the chief economist with the Commonwealth Bank. And there were lots of charts and lots of information. I did the best, Stephen, to take some notes. But the function was so nice, I don't think I can probably read them. How are you, Stephen? Thank you for your time.
Good morning. I'm very well. It was great to meet you last night.
No, well, thank you for coming on the show. I got the feeling from what you were saying that you're very upbeat about the economy in the coming year. You don't see too many storm clouds on the horizon, I gather.
Well, the pace of economic growth is slowing, and that's under the weight of these big increase in interest rates we've had from the Reserve Bank, starting from May last year all the way to November. So, there's definitely the impact of those rate hikes is going to continue into next year, and growth's going to slow. But compared to most other major economies around the world, Australia remains in pretty good shape. So, I think that's a positive point towards the end of this year.
Yeah, indeed. But we are blessed in many ways, natural resources. You did make a fairly big thing of the mining industry. Just how important? I mean, the coal is important. I guess the iron ore is important. I guess the gas is important. We better not forget how important the mining sector is.
Well, yeah, that's right. I mean, particularly for our export markets, iron ore and other resources, as you mentioned, like coal and gas, are really critical. But as I talked about last night, the world is going through a big change with the target of net zero carbon by 2050. That's going to change the nature of many economies, and including our resource sector. But as you mentioned, we're blessed with significant reserves of lots of resources, including many of those metals and minerals that will be critical to helping the world move to net zero by 2050. So the transition to a lower carbon world, Australia has great opportunity in the mining sector and other sectors to really benefit from that as well.
This pursuit of renewables and this goal, what we've got to achieve by 2030 and net zero by 2050, can we do that without doing irreparable harm to the economy?
Well, I think the simple answer to that question is yes, but it's going to take a fair bit of time and money. The International Energy Agency has estimated that global capital expenditure to get us to net zero is going to need to be about $5 trillion per year.
$5 trillion?
We're currently spending about 2.5.
Is that worth
it's a lot
it?
of money. Yeah.
Is it worth it? $5 trillion to get to net zero? And after all, they tell me that swamplands and wetlands and deltas and, believe it or not, termites produce more greenhouse gas than the human beings on the face of the planet.
Well, I haven't heard that one before, but I think, we can see around the world, a real need and a real desire to produce, the way I think about it, produce every unit of GDP with less carbon. And so that transition is underway. It's going to have to accelerate. And the message I wanted to give it is that there's actually pretty significant opportunities for Australia in that change.
Well, if we fix our 1% contribution to greenhouse gas and emissions generally, and China does absolutely nothing, and India does absolutely nothing, surely our attempts are silly and wasted.
Well,
along with our $5 trillion.
Well, the $5 trillion is global, and
I see.
Our spending will be a lot smaller than that.
How much would it be for us?
It's more in the into the billions of dollars, so it's still significant, but it's not as you said, we're a small part of the global economy.
Yeah.
But so we've got to do our bit. But the real issue is what we're exporting to the rest of the world. And so there's opportunities for us to increase our exports of the critical metals and minerals needed to build the infrastructure to get us to net zero, to get the world to net zero by 2050.
Do you see any storm clouds, anything on the horizon, anything we should be watching out for?
Well, yes, unfortunately. So internationally, there's clearly some geopolitical risk with two hot wars at the moment, Russia and Ukraine, and of course Israel and Hamas. Unfortunately, it would not be a good thing if those wars were to spread further. And next year is a US presidential election. So, it looks like it's going to be Biden versus Trump again. So that could be really, a big event, a big risk for the world. But domestically, I think the major risk is in the housing market. And we've got a big increase in demand for housing, both from natural population growth, but also a big increase in migration this year and likely next year. And the property sector, the construction sector, is finding it very, very difficult to deliver enough new supply of housing. So we've got a big increase in demand, not enough supply.
Yep. And
when that happens, there's only one thing that can result, which is higher prices. So we're seeing house dwelling prices increase quite significantly this year. They're going to increase more next year. We're back to all-time record high dwelling prices in Australia. And it's going to take quite a number of years to solve that, that supply problem. So I think that's a big issue for the local economy.
When did houses start to become unaffordable? I remember, and I suspect that when I was buying my house, would have been a bit like when my parents and grandparents were buying their house, that it would probably be, say, 3 times one's annual income to buy a house. Now I think it's something like 7 or 8 times a person's much larger income to buy a house. When did that start? Why did that happen?
Well, it's been happening for the last 20 years or more. Interest rates, progressively declined for more than a decade.
Yeah.
But really, it's it kind of sounds odd. We're an incredibly large country with a relatively small population, but we all tend to, well, not all, most of us tend to like to live in a few big cities, and so we've had a significant increase in demand, not enough supply coming on.
Yeah.
Lower interest rates mean people can borrow more money. That helps pushes up the prices as well. I think we focus too much on the demand side of the housing equation, not enough on the supply side. So housing in Australia is expensive. We've got one of the highest household debt to income ratios in the world.
Yeah.
And right now the problems are being exacerbated by, if you like, the leftover from the COVID restrictions with global supply chain of materials and people, but a big increase in population growth this year and next year.
And we all want to own a house. We all, preferably with a 1/4-acre block and a house on it. People in other parts of the world seem to be quite happy to rent all their entire lives.
Yes, and one of the issues there is, in Australia, you can really only get rents for 6 or maybe 12-month contract at a time.
Yeah.
Whereas in other countries, particularly in Europe, you can have rental agreements that go for years and years. So, the certainty, there's much more certainty in other countries about how long you'll be able to stay in the place you're renting.
Yeah.
In Australia, it's basically a year-by-year prospect.
Inflation is on the way down by the look of it. What was it, 4.9%, down from 5.6%?
So the October reading was 4.9. That's the monthly, what they call the CPI indicator. For the September quarter, which is the last quarterly number, it was 5.2%, and we peaked at 7.8% in the December quarter last year. So it's clearly decelerating, as is inflation around most of the rest of the world. So we're well off the highs, but we've still got a way to go before we get back into the target range, which for us here in Australia is 2 to 3%.
Yep, but would you say we're in for a soft landing? I don't think you mentioned last night anything about a recession.
Yeah, that's right. So our forecast is a soft landing, no recession here in Australia. So economic growth is going to be modest next year. We're forecasting 1.6% economic growth in Australia next year. The long run average is about 2.7% per year. So it's going to feel pretty slow and pretty difficult for many people next year. But we're not forecasting a recession, so that's good news.
Are you forecasting any more interest rate rises?
No, we're not. We think our base case is no more rate hikes, and the deceleration in inflation that we saw in the October numbers supports that view. There's another Reserve Bank board meeting next week on Tuesday. We think there's very little chance of a rate hike next week. February next year would probably be the danger point. We do get the December quarter inflation numbers at the end of January, and by February next year we'll know how spending has gone over the holiday period. November is likely to be pretty solid for spending. December weak, as people are going to bring forward their Christmas shopping to the Black Friday, Cyber Monday. But overall, we think the signs of the economy slowing, inflation decelerating, means the Reserve Bank will be able to keep interest rates on hold now for an extended period.
Stephen, I've always wanted to ask an economist this question. Why can't we claim inflation as a tax deduction?
Well, that's a good question. I don't know the answer to the question.
You see what I mean?
Well,
if the money that I've got either in my pocket or in the bank is worth 5% or 4.9% less at the end of the year, that's the government should take responsibility for that. I should be able to claim what inflation has done to my wealth against my income.
Well, I guess there, as you mentioned, it's the government, right? So that would reduce revenue to the government. This indexation,
and they'd jump on inflation immediately.
Yeah. So then the question is, okay, that reduced revenue flow, does that mean we have budget deficits, or what do they do with spending? So it would be, it'd have a big impact on the flow of money, as you said, between the private sector and the government sector, which is probably why the government's not so keen to do that.
No, I don't know that they've even thought about it, but it just strikes me that if something is eating away at the value of every dollar, it would be reasonable to sort of be able to claim it from someone, and the government seems to me to be a likely candidate. In America, I think I saw that inflation there had come down to something like 2%.
No, not that far yet, but it's definitely coming down. It's 3.2%, the most recent reading.
Right.
2% is the target of the US Fed.
Yeah.
The inflation is decelerating in the US quite quickly, which is good news. So again, we think that no more interest rate increases from the US Federal Reserve, and markets have been responding positively to that in recent weeks.
Oh, well, that's fine. I hope you enjoy your stay in Adelaide, Stephen. Thank you very much for giving us your valuable time. I really appreciate it.
Yeah, my pleasure. It's great to meet you, and chat again soon. Thank you.
Stephen Halmarick, Chief Economist with the Commonwealth Bank.
Are you a podcaster? Maybe you've got that big idea and you're looking for a network to join. The multi-award-winning Ozcast network can get your content to eyes and ears all over the world. Join now for the first month free, and you could be featuring this sound at the beginning of your podcast.
Ozcast.
Simply head to ozcastnetwork.com for details.